Okay, good morning, everyone. We're going to be a financial economist kind of a perspective on DeFi. Everybody here is very economic trained and swimming in it every day. So it'll be a very much of a real-time mark to the market, real-time consequences type of discussion. I am Sheldon Freedman. I'm a lawyer with Hassans in Gibraltar. I live here in Israel. And we are very happy to see many of our clients here today, like Tezos and INX and Celsius and Fireblocks. And we welcome you all here today. We're a jurisdiction that's very popular in Israel, and many of the best companies in Israel like to come to Gibraltar for all sorts of things, whether it's licensing or forming companies, issuing tokens, whatever. And I invite anyone who wants to talk about whatever he's doing or would like to do in crypto to talk to me during the conference or after. I live here. And I'll just introduce the panel quickly because they're not really with long introductions. So Maya is a well-known here in Israel, and she's basically dealing as an investor and an investor advisor, and she'll explain through what she's doing. And then Shauli is a similar local person who needs no introduction, and he's also a personal trainer. So he was brought in since the Terra crash. He's very valuable as a personal trainer now that we need. And Jonathan Shek, I would normally have welcomed him first as the foreign visitor. But this man needs no welcome. This is his 7th trip to Israel, and he knows Israel very well. He's one of us. And welcome again, Jonathan. Jump right in, please. Oh, you're the only one getting paid here.
You know, the regulators late to the game, right?
You're getting paid, so you can. Yeah. So Ilan is. I should say, Ilan is here speaking. Often we say at these conferences, Ilan is here to express his own opinions. What he says doesn't represent the government of Israel or any regulator. That is not true. Ilan is here as a regulator speaking for the government of Israel today, and he's on the record. So Maya, I should also point out that Jonathan is a project engineer, a major Southeast Asian developer, and he has a new concept which we'll hear about of Ecozone. There's already one in Philippines, and it's very much based on the DeFi paradigm. So Maya, what's going on in the market today? Like, what are you finding in all the crises that you're dealing with on a daily basis?
I think we're going through a cleanse. We've seen crypto since March 20 and the beginning of COVID kind of become a growth tech investment. And we had DeFi summer, which was the summer of food protocols, right? Sushi, yam, and everything else. And sorry, is this better? Okay. So right now, following the Luna crash, I think we're seeing a lot of the copy pasta and the more fraudulent and unsustainable crypto protocols kind of flush out from the ecosystem. And I think that's, as an investor, as an angel investor, I think that's a really good thing, because over the last 5-6 months, the valuations that we've seen were not something that were reasonable, even compared to Israeli cyber industry. And bear markets are an amazing opportunity to go back to building. And I think there are a lot of things that crypto has to contend with, both technological ahead of the merge, and the different bridging, but also financially, right? Because a lot of the growth we've seen since the DeFi summer has been subject to yield farms, which SBF very famously said, it's the box that brings new tokens to every user who deposits money there. And the fundamental DeFi protocols have to almost be rethought of, because we have a lot more primitives that the ecosystem is going to need. And we've seen that DeFi has become way too complicated and obfuscates a lot of risks from retail. So I think we're gonna see much more what we call CDeFi, happen to simplify that on one side, and on the other, more institutional and sophisticated investors get into DeFi, whereas retail will go more into the NFT media / gaming.
Can you give us a report from the trenches of anything you're dealing with interest rates, liquidity, all the crises that we're dealing with now?
Yeah, for sure. So I think, I don't think this. One of the things that happened post-COVID and the crash in March 20 was that investors wanted yield, right? Because all the central banks in the developed world basically lowered their interest rate in order to retain liquidity in repo markets. And suddenly you had DeFi pools coming in initially giving you 30, 35%, and then came in the new protocols. And this is like the Web3 bootstrapping strategy. If Web2 basically subsidizes your Uber rides or your Walt orders or something like that, in crypto, and specifically in DeFi, it was yield farming, right? When a protocol just launches, they need liquidity. How do they give you liquidity? Give us your money, we'll give you new tokens. And that meant a really, really high yield that used to reach up until like over 100% sometimes right when a protocol would launch. But that also brought with it what we call the rug pull risk. And anyone who's been in DeFi knows that the big danger of these things is that you deposit money and these founders who you don't necessarily know and you didn't audit their contracts can just take it all out from under you and rush to the door with your money. So one of the things that right now has happened is that most of the liquidity within DeFi has been on stablecoin pools ever since, I'd say, spring of last year, May 21. And we've seen those yields go down. They're still more competitive than what we see in traditional markets. But now they're getting even lower. And a lot of money post-Terra Luna, about $45 billion, has left the ecosystem, both from stablecoins and from the liquidity locked on-chain.
Shauli, how critical are interest rates to this whole thing?
So basically, I think that the interest rates probably affects all the industry. It's basically that's the main tool for central banks to set the liquidity and the amount of money that's streaming the ecosystem. And once governments are providing some good deposit opportunities, people just prefer to skip the option to be rug pulled and to get lost or lose all their funds. I prefer to do it in risk-free asset. But I really think we should understand if there is a real risk-free asset in the world of today, is something that is not determined to the fact that liquidity is leaving the market and valuation is going to go lower, and it's probably going to affect on all the market. So basically that.
So Ilan, you're the chief economist at the Israel Securities Authority. You're a director of strategy. Have you lost any sleep over the demise of the stablecoin?
Yeah, so first of all, thank you for being here. It's not trivial, so thank you very much. And we did lose some sleep, and I'll tell you why. Because as I see it, stablecoins are not a subset in crypto. They're the core of the crypto world, and I'll explain. I think that as long as we don't see another development in stablecoins becoming more regulated and more stable, basically, and more trusted, we do see a ceiling or a glass ceiling for the entire crypto industry as I see it. Because let's take the traditional financial system. If I want to buy an Apple share, let's say I pay $140, and the pair for the share is basically the dollar. I pay $140 for the Apple share, and I get the dollar. Most of the people who buy Apple shares don't think about the dollar. Now, if I take it to the crypto world, and I can't buy two-thirds of a Microsoft share and buy an Apple share. It doesn't work like that. So when I take it to the crypto world, I won't buy Ethereum with Bitcoin. I have to have some stablecoins for each and every transaction. Now, if I don't trust those stablecoins, the base of the crypto world can work. Now, we saw the pegging of Luna was basically a scam. and we did see a sort of depegging in USDT. It was a small one, but as we see liquidity coming out of the markets, and it probably will continue. And as we see more liquidity coming out, the stress on financial markets will increase. That's how it works. That's the way it should work. And then you see the fundamentals, and then you see who can sustain the heat. Now, if we do see another depegging, I think the entire crypto system will need to come in terms, how do we build a more robust stablecoins and regulated stablecoins. And I think, in my view, it's kind of like flying before the 19th century. People knew we can fly airplanes in some sort, but we didn't reach there yet. So I think it's a part of an evolution, and I'm hoping that we'll come there. But until we go there, I think there's some sort of a glass ceiling, in my view. Yeah?
Jonathan, we're all adults, I think, in the room, so I can use a dirty word. Do you think stablecoins should be regulated?
Well, that's a very interesting question. I think stablecoins need to be more trusted. The key is trust. And how do you build trust? Well, you build trust through transparency sometimes. You build trust through actually letting people know exactly what you're doing to back it up and how does the whole ecosystem work. And so, should stablecoins be regulated? I would say yes and no. You need to have some level of regulation to have a system of trust. At the same time, in the DeFi space, you need to have a stable coin where you have a certain level of transaction, which gives people the kind of DeFi freedom that they want that is not under regulation. So it's a very tricky question. It's a dirty word, I agree with you, but it's all about trust.
Maya, what do you think?
Yeah, I think there's something like inherently misconceiving when we say should stablecoins be regulated, right? Because other than the Israeli Security Authority, which is always late, everyone has been talking about stablecoin regulations for like years. This is not a novelty, right? Even the Trump administration already had the Munchin working group. And I think there is no question that stablecoin should be regulated. The question is how and what and how does that affect non-custodial wallets and liquidity pools, right? So there are essentially three different kinds of stablecoins. There's like the centralized reserve-backed stablecoins, which is Circle, already regulated with a bank charter under the OCC. It's not like controversial at all. You have USDT, and they have their issues. Now you also have a new Andreessen-backed, asset-backed stablecoin with Nouriel Roubini that's going to launch in the U.S. Reserve-backed stablecoins are money market funds. That is not a novel concept, right? So every time someone wants to redeem their stablecoin, they're going to have to go through AML, KYC. These reserves sit in banks. Some of them might have access to central bank deposits. Nothing new here. And I think that's a good thing. The novelty is algo stablecoins or fractionalized stablecoins, and we have, before the Luna debacle, I don't think, well, I know, neither the IMF nor BIS, the bank of all banks, put too much thought into the death spiral of algo stablecoins. And this is something that everyone in the industry has given it a lot of thought and was very, very vocal about the issues when one of them can unwind. And most of the algo stablecoins like Luna have broken apart because, like, let's face it, the history of finance, and this, again, this is nothing that crypto invented, is that every single peg gets unpegged, right? That happened with the Hong Kong dollar, that happened in Argentina with the peso. It always happens. The question is what happens later. And if we're looking at the reserve-backed stablecoins, I think it's inherently important to have a serious conversation with regulators how to build that framework so that it doesn't kill DeFi and because of the other side of the regulations, not where the reserves are, but hey, can people put in a stable coin in a liquidity pool? Does every protocol need to be KYC AML'd? How do we decipher between the two novelties and keep crypto permissionless, right? And the nuance is where the stable coins really play into the health of crypto.
I would love to refer to that also. And just to say that basically DeFi When you're looking on the protocol, that's the governance. That's the authority. So basically, when you're writing a protocol, you have the specific rules of what you can do with it or not. And if you could say that it's regulated or not regulated, of course it's regulated because you cannot do anything that is updating the protocol. But we also need to refer like how the authority sees that, because sometimes the regulation that the free markets is
family word.
No. So I will just want to take that another step forward. So basically, the whole concept of DeFi and all crypto, we're saying like the code is the rule. The code, like we trust in code. That's why we believe in distributed systems, because we trust the code that will act and will give the same conditions to any type of player that's obtaining the rules. But on the other hand, sometimes we're open to manipulations, as have you heard, where like the world today know 3 types of stable coins. Some of them are more regulated like by the authorities and have specific agreements and got specific license to issue them, let's say USDC, which is a terrific example. But on the other hand, when you want to take innovation forward, things like Luna will happen. People will manipulate algorithms. People who build algorithms sometimes will be more smart than that. And actually, when you're thinking about the challenge of cracking an algorithm and like to be able to manipulate it, it's much more challenging than to penetrating to a system, because it's kind of like running the whole market. And we've seen that and been witnessing to what happened in Luna, which is, in my point of view, it's something that probably will see a lot of effects that will go to the market, because that's, like some will call it attack, some will say it's a hacker. No one hacked in. It's a full manipulation of the whole ecosystem of understanding how the DAO would take a decision and how the protocol is working. And yeah, it happens. It will happen more.
Yeah. It's interesting. I was in New York last week with Tom Draper, and he was asked by a professional journalist at a conference about Luna, and it had just happened. And it's interesting how the billionaires answer this question differently than you guys. Like they're billionaires, and they said the same thing. They say, oh, you know what? This stuff happens. You know, of course this stuff happens. But I heard the $1 billion answer, and yours is pretty good.
It's like I want to tell you, let's go out to the buffet outside, and we each eat a dish, and 2 people will die. You know, it will happen. So let's not regulate the food on the table, because why do we need regulation? Like 2 people die, that happens, yeah? But as we go out and eat the buffet, nobody thinks about the food he eats because it's regulated, right? And nobody thinks about the baby formula or I don't know what. There's a lot of fields that are regulated that people take for granted. So I can't allow statistically, yeah, for 2 people to die. That's not how regulation works. Now, as I look at regulation, yeah, and that's the glass ceiling I'm talking about, because the crypto industry can't evolve until it becomes statistically insignificant that Luna occurs. Let's put it this way. And I'm not into incumbent protection. I'm into investor protection, and that's an important thing to say. But being in the field of investor protection, and as I said, not incumbent protection, because I'm technology neutral and I'm a provider neutral. I can't allow some of the providers, the regulators, the regulated providers, to become, you know, scammers, basically.
Right, because you're an economist and you're looking at cost benefit, whereas an antitrust would look at consumer versus incumbent. So I appreciate that the cost is your pain point. And
Yeah.
Can I just point out 3 things that I think have kind of been missed in this panel?
Yes.
1, Luna worked as intended. There was no hack, there was no manipulation. Everyone knew everything. 2, a lot of Wall Street and the billionaires had a lot of money in this, and you can say that there's more money for the so-called incumbents and billionaires than that they have a stake in any way this kind of shapes out, i.e. Jump, Galaxy Digital, and so forth, and the venture funds. And you can say that if you want investor protection, maybe you need to go to the investors who fund this and not to the retail. And three, which I think is very, very important, is that Janet Yellen herself came out and said that none of the toxic spiral that occurred after Luna got depegged spilled over into any other market, meaning crypto has been very self-sustained as a market and was able to contain that risk in itself.
That's good. That's a good observation.
Jonathan,
Jonathan,
it affected all the market because they were backed by multiple
Right.
coins. So
Yeah,
definitely when...
But only crypto.
Right. That was part of their ecosystem, and that's why it's so open to manipulations.
Jonathan, I want to ask you, since in your paradigm in the Ecozone project that you're working on is heavily based on a DeFi model and dynamic. If you could give us your view on how important is DeFi as an economic backbone to the entire ecosystem?
Okay. What we are building is actually DeFi-free zones around the world. The first that we did is in the Philippines. What we've done is we have legislated it. We've got it approved by the President's office and the Congress as well. And we're looking for similar projects around the world to have a DeFi-free zones around the world. What we have is tax-free or near zero-tax living. We have a residency, on-site, off-site residency, which means that you can either live in our free zone or you can live outside and you get the same benefits. You have a regulatory cover, that's very important, so regulatory cover that makes DeFi legal in our free zones. And then, of course, you have growing your wealth in our free zones, wealth creation, economic activity, as well as investing. And finally, a very important factor in our free zones is actually financial privacy, banking secrecy. So no government, not even the Philippine government, can come and say, I want to look into this guy's crypto wallet, a bank account. So that's what we're doing. So it's important for people who want freedom in the DeFi space. So what we are doing...
It's important economically or it's important philosophically?
It's important both. Because there are people who would like economic activity to be in the DeFi free zone space. So of course, philosophically as well, I believe in freedom. I believe in a person's freedom of choice of sending money where he wants to send, buy whatever he wants to buy. Today it's getting a little bit more difficult sending money cross borders. The SWIFT system is, I think most of you would know, pretty difficult right nowadays. So yeah, so it's philosophical as well as practical.
It's very ambitious, this free zone project. We could spend the entire session just talking about Jonathan's economic zone projects. And in fact, the organizers knew that. And he has a workshop tomorrow at 11:30, 11:35, I think, here. And they have his group has it's called Oz. They have a booth here. So I invite you all to come to Jonathan's workshop tomorrow and to visit his booth and learn about this very, very ambitious economic zone, the first of which is in Philippines. It's actually up and running, a huge country with a huge project, very close to Manila, and it's quite serious stuff.
Yeah,
Ilan.
we're also talking to more than 10 other ecozones around the world. Latin America, South Pacific, it's not just Philippines.
Can you say some more words about that? Like, who are you collaborating with?
Well, the countries in Central America, South America.
But it's from the country's level, like governments.
Yes, government level. Yeah.
Right. Ilan, soon to be Dr. Ilan. We would all love to hear from you. What's coming in the pipeline in terms of liberalizing life for us, making crypto more digestible and active and acceptable in this country. And we'd like to hear from you what you can share with us about policy that's very imminent.
Yeah, so I'm going to relate to the DeFi space, and then I'm going to relate to a question. So first of all, I think in DeFi, in DeFi, we have a few, let's call it features that have economic beneficiaries that we don't have in traditional markets. Yeah, the engagement of users in the financial operation or company or whatever it's much greater with some of the DeFi features, and I think it could be beneficiary. But we do see a few problems that we need to look how can we solve them. First of all, there is the notion of no trust. It doesn't exist. You trust something. You either trust the platform if it's a CeFi, or you trust the code if it's a DeFi. Now, if you trust the code, you need to understand the code. Now, how many people sitting in the audience know code, like really know code? In this audience, maybe, let's say 20, 30, 40%, I don't know. But in each and every audience, how many people really read code and know code? They don't do that. They trust other people who read the code. Now, that's a path you really don't want to take, because you need to basically somehow manufacture an objective observer who will read the code and explain the code to bystanders, basically. So that's a thing regulation needs to work, because we need advisors, objective advisors, to explain, to our...
We understand it's a big responsibility and it takes a lot of work and a lot of expertise, but what are you going to give us? Like, where's this going?
So we work, basically the Ministry of Finance have been working on a holistic regulation viewpoint. And I can say all the Israeli regulators have put forward their views regarding taxes, regarding our Israeli Securities Authority's view and the Bank of Israel, and we all contributed to this report. And it's in its very final rounds, and I can say that I hope if the political situation allows us, that in the very near future we could address all the issues put forward, and I can say we have looked at it in a very, very serious and methodical viewpoint, and there's a report.
What's driving sentiment? Can you tell us the pro sentiment? Is it personal views? Is it industry pressure? Is it public opinion? What are the dynamics here?
So we, again, the Ministry of Finance had a big discussion with a lot of the community members. We talked with other regulators, we searched the field, and we got to terms that a lot of we have a significant number of Israelis who are investing in cryptos. We want to see the industry develop here. And that's...
You mean from a consumer side or from a producer side?
From a producer side, we're a technology hub. We want to see the crypto technology.
So it bothers your colleagues that eToro comes to us in Gibraltar, that you'd like to have them all here all the time?
I think we as...
Celsius.
Gibraltar is a great place, but I think Israel can be a great place as well for crypto entrepreneurs. And I think we should encourage the industry, again, in a regulated form. And I really hope we can do it in the next very near future.
How can we as an industry, and maybe this is what you want to comment on this, how can we as an industry contribute to moving this forward?
Basically, we already consulted the industry. Now it should come to legislation. And
so like the woman is in the delivery room and we're in the waiting room.
Is there legislation or is it another report? I just like in terms of action item.
No, legislation.
There's a legislation,
Yeah.
okay. So excuse me, sorry. I just wanted to comment that I just find as an Israeli, and I think anyone in crypto, like you work globally, right? And you are not that affected with, other than when you have as a personal person, like, or a company, you're not affected by Israeli regulations, right? The crypto industry is not waiting for the Israeli government or the Knesset to say, hey, we need code auditors. We already have code auditors. Most people do not put money in any protocol without a code auditor. If you're looking to stablecoin, you're not waiting for the Israeli government to say, hey, we need a stablecoin legislation. No, you're looking at the audits from Tether, and you're looking at Jeremy Allaire, and you're looking at who Grant and Thornton and their report that they put out. Now, don't get me wrong. I think specifically the kind of work that the Israeli policy workers have been doing over the last year has been super serious and more substantial than it has up till now. But I'm saying that because DeFi really is that big and we're entering a bear market, the regulation is going to come from the US and from international zones, and us as a community, we need to make sure that both investors and builders have a framework, but that's not going to be like a hindrance. It's just going to help us like grow for the next bull market and produce more, right?
I agree. And legislation and let's say regulation should not, be fully observed in the economic cycle. We can't look at an asset and say, look, it's in a bear market right now, so let's put the legislation on hold. I think that's a very bad view. Especially now, we need a framework for crypto. It doesn't matter if Bitcoin goes to 15,000 or 45,000. And especially now, I think that after the Luna incident, we understood that there are significant risks in the industry, and the framework works both ways. It allows you to freedom to operate in some fields, but it also gives the investor protection we were looking for. Now, true, it's not the place that the US is in, yeah, but
so like, let's give the Luna example for just, I think this is an amazing opportunity because you're here and we're discussing backbone and like, seriously. So investor protection, as the SEC sees it and as it is in TradeFi, is usually segregated accounts, right? It's the concept that if you put money in a bank, it sits in the bank, and the financial intermediary that holds it can't do anything without your license.
And the deposit insurance.
And deposit insurance, yes, exactly. And Gary Gensler, I think, and the SEC has been very vocal about the fact that crypto needs that. So here's a very relevant question, I think. We saw that a lot of the death spiral in Luna started because one of the CeFi protocols essentially took their investors' money and put 500 million in Luna, and then took it all out through the pool 3 curve, right? 3-pool curve. Would this be a violation of the rehypothecation that investor protections provide investors in traditional markets in Israel?
It's very specific.
No, it's one of the biggest Israeli companies, so I think it's very relevant.
I think there is many different issue here that we're not referring to the fact that there should be a different regulation between entrepreneurs who know what they're doing and taking the risks and professional investors to the average Joe that doesn't know. And exactly as you're saying, Ilan, he doesn't know how to read code, he doesn't know what protocol he's doing, and he's probably going to use the CeFi to purchase them. They probably will not going to find any DEX or use some other solutions. How can you, and that's what I think that the main issue here, that there is no full separation between the two, if you're going to that. And just to tell the audience here, I'm not really sure if we talked about it, but basically DeFi, it's a whole new world, right? Like you're taking an unliquid asset, you lock it, and for that you creating a new asset and provide it as an interest. But for that financial or like just simple action, you need to have a full system to calculate risk, to calculate interest rate, to be affected by the number of participants in the protocol and the number of the amount of liquidity, and that's a whole new type of technologies. And it seems like the authorities here are like I don't want you're getting all the fire because you're representing it, but
no, we're very supportive of him now. We like his thing. Now we're cool.
Oh, yeah. Maya is usually more aggressive, so it's everything good.
You're treated better by the industry probably than at the government meetings.
How do authorities see that separations?
Look, it's a matter of incentives, because when you look at it, you can't, there's a CeFi who sits in the Bahamas or whatever, yeah? And it doesn't want to be regulated, and you can't force it to be regulated because that's technology and you can transfer funds, and if you want to, you can. But if I can allow some CeFis to be regulated, and I'm basically giving them the OK stamp, you believe that that a large number of participants will say, look, those guys are regulated, those guys aren't, those guys that aren't regulated, I'm going to get, I don't know, 30%. In the regulated guys, I'm going to get 15%. But that's okay because they have the OK stamp. So it's not a problem that some are regulated, even if they sit abroad, and some are, because it's a matter of incentive. And if you want to take your money, and if you want to invest in an unregulated entity, I can stop you. But,
Oh, you can.
you know.
Oh, you can. You can stop me. You can stop me from doing it professionally. You can stop me from doing it. Although I know my risk. I know how to calculate it.
But you can maneuver it. A lot of times you can maneuver it. It's technology. We all
I
know.
need to juggle if I want to do something legal.
Yeah, but the thing is, we want to give a regulated path. We don't want we want to give some access to entities that are willing to be regulated, are willing to take the cost of being regulated, and give the investors that sit in the crowd or sitting at home and don't want to think if any time they wake up in the morning the money is still there. That's like.
But Ilan,
Jonathan,
the companies, the
would you mind to talk about
CFI
this, yeah?
that lost the most amount of money, like are YC companies that were regulated and held these companies like Alice, and like there was a State Capital, I think it was. It wasn't the unregulated. The unregulated, specifically in Luna, could take their money out. So that's kind of like the irony that I hope you guys, and the nuance you guys appreciate.
Yeah, again, it's complicated. It's a new world. We tend to look at the new world in our terms of the old world. That if you're regulated, the chance of you going bankrupt tomorrow morning because of A, B, C is lower than being an unregulated entity. And the experience of DeFi hasn't been as you said, but you know.
I'd like to share a bit about what happened in Singapore with regards to regulation. So last year, 2021, the Singapore government took, I'm from Singapore, the Singapore government took a position that it wanted to regulate much of the crypto space. So what happened was that those who agreed to be regulated stayed in Singapore, like FTX and CoinHaku and all those guys, and those that didn't want to be regulated left, like Binance, Huobi, they just left Singapore last year, just lock, stock, and barrel, just left the market. So it's really about the effect, like Binance and Huobi, the two largest exchanges, the two largest centralized exchanges, they didn't want to be regulated, they left.
Digital nomads. My last question, Ilan, I want to ask you, aside from the regulatory issues and the policy that we've been discussing, I just want to depart from that and go to a higher level. Since you're someone who has thought a lot about this, you're a professional economist, and you have a lot of resources that you've been able to be exposed to. What is your financial economic view of the whole DeFi as an economic asset and as an economic paradigm for the economy?
Well, look, there's there are economic features in DeFi that will sustain. That's in my view. Yeah, I'm willing to put my opinion on the line here, and I think there are economic features that will sustain that aren't available in the current financial system. But there is also a lot of hot air in the sector right now, and in the situation of liquidity continues to coming out, we're going to see some stress testing of some of the protocols, in my view, and some will survive, some won't. But I think that after the current winter, yeah, we will see which of the features have fundamental value, and I think I'm one of the few regulators that are willing to say that some do have some fundamental value. So I guess that's something, yeah.
He's right.
You're not the only one. I mean, I love
Some of the
regulators.
few. Some of the few. I'm not saying that.
He's definitely shining there.
Let's be honest that when it's the bear markets, that's when people build. And crypto, just over the last 2 weeks, has been stress tested more than any other traditional markets, given the downside that we've seen both in equities and in bonds, and including private credit markets. So we've done the stress test, we've done the battle tested, and I actually think that going forward, we're going to see much more new primitive, and we're probably going to see more DeFi and NFT kind of merge together and leave people like Ilan looking at us like, guys, what the hell are you doing? All over again.
Masters of the universe.
Cool. We haven't talked about it like at all, but the correlation between the entire crypto world and it's basically the most speculative part of the financial system right now. It's like the speculative part of the financial system. It's like 2 or 3x the Nasdaq, basically right now. The Nasdaq goes 2% down, Bitcoin goes 6% down. So it's not uncorrelated to the financial market.
You can speak in the brawl room. The brawl room is just outside the door. Thank you, panel. It's been very interesting.
Thank you.
Thank you very much,
Thank you very
Sheldon,
much.
for doing it. Now I understand why all these companies choosing you.